What up, guys? Welcome back. It is Wednesday, and we got some good news today. The stocks are still up. AMD is killing, as always. It's just been completely on a tear lately. Facebook's doing really well. I'm going to put a screenshot like right up here so you guys can see. I'm filming with my phone right now, so I can't show my phone right now, and I'm not near a computer. So I'm just going to post that up here. The call option's doing really well, but they are actually reporting earnings today. So this is a really volatile time for options, and they can either go up a lot after earnings or go down a lot. So I'm thinking about taking my profits. I'm going to check on my profits to see how I'm doing, and if it's good enough for me, I might just sell and just take my profits and get out. I'm a little scared of the risk involved. But also, do want to tell you we have a special guest for you guys today. One of our subscribers who also trades options is going to show us a trade he's going to do. So that's really exciting. It's our first guest for the channel, so I'm really excited about that. So yeah, stay tuned. We got some cool stuff in store for you today.
Tesla stock. Cookie.
All right, so I'm home now, just having some lunch, looking at my stocks. I'm considering selling my Tesla call today. I was just looking at my history to see when I bought it. So it looks like I bought it at 1795. So I'm just writing on this little digital pad here to see what my profit is so far and whether I should get out or not. So 3598. That's how much I spent on it. So I want to see what it's currently at, because that unrealized gains and loss page tends to not update as quickly. And right here I can see the actual current price. So $21.30, $21.30. So if I sold it for hold on, let me get the calculator out. All right, so right now each contract would be worth that much. Pretty sure I have two of these. So if I were to sell right now, I'd be at 42.60. Yeah, so if I subtract the 35.98, so yeah, not that much. Looks like, I guess it was pretty updated. I don't know why it didn't seem updated, but it looks like when I go to my account and then the unrealized gains, I think it is up to date. I thought it was up a lot more than that, to be honest. So that kind of sucks. Yeah, there's the Tesla call right there. And it looks like, yep, we are only up about 18%. So the decision is, do I hold on to it, hope for a good earnings report from Tesla, or do I sell and take my profits and, avoid the risk of losing, hundreds of dollars? So that's the question here. Even though Tesla stock is down right now, our guest, who we're going to be talking to pretty soon, told me that even if the stock goes down, the option could still go up because of its anticipation of volatility or something like that. And so, yeah, even though Tesla is actually down, hold on, let me see if I can find it. Tesla is down 1.15% right now. So I'm guessing, I don't think that people are anticipating great earnings, but for some reason, yeah, like the option is up. Despite it being down that much, it's up 7.85%, the call that I have actually. So yeah, not really sure. I'm just gonna read some articles real quick and make my decision in a few minutes. All right, what's up, guys? We are here with my friend Joe. He's on a voice call right now, but we are gonna be looking at his screen here in a second. Alright, so here's the most basic breakdown of an iron condor as I understand it. I'm going to put a link in the description for a video that gives a little more explanation, goes into more detail about how this works, because I'm only going to explain one scenario here because it's the one I understand the most, and it just most illustrates the purpose of this type of trade. So let's say you have a stock, and we're going to see Joe, he's doing Tesla. He's going to do a trade with Tesla. So let's say you have Tesla stock has been going up like this. Let's say it's currently sitting at this price. Doesn't really matter what it is. Let's just say it's sitting right here. What you can do is you can sell a call option and a put option. So the reason you do this is, let's say, okay, so the thing to remember with call options is it gives you an option to buy a stock at a certain price, the strike price. So the closer your strike price is to the actual price, the more expensive it'll be, because you have an easier probability of hitting that price. Same with a put option. A put option is an option to sell a stock at a certain price. And the closer your strike price is to the current price, the more higher probability you'll have of getting to that price, which means you have to pay more money for that because you're taking less risk. So by selling a call option, let's say at this price, at a little bit higher than what it is, and selling a put option for a little bit lower than what it is, you can collect money from those sales. Now, the risk is if you sell a call option and you don't own the stock, if the price goes above it and the person wants to exercise that option, you're screwed because you have to now buy those shares so that you could sell it to them no matter what the price is, and so that you can lose a lot of money. So what you do with an iron condor is you buy a call option. In addition to selling the call option, you buy a call option at a higher price because a higher price strike price will be less expensive, so you don't pay as much. But it gives you protection in case you do have to end up buying shares. You can use your call option to buy those shares at that price, guaranteed, even if it goes way higher. So I guess I am kind of explaining multiple scenarios, but all right, so when you do that, since this is more expensive than this, you will make a profit when you do those two calls. Down the bottom end, so if a stock goes way down here and someone wants to exercise that option, you're forced to buy those shares from them because they're going to exercise their option to sell their shares. Now that's going to be real expensive. So what you can do is you can buy a put option, and it makes sense to buy it at a lower price, strike price, because it's cheaper, and so you'll make a profit. The difference of these two, you'll make a profit there as well. So just in case the stock goes down here, you have protection, because if they want to exercise their option to sell to you, you still have an option to sell to someone else so that you can still make that money back instead of having to buy all those shares from that person. Okay, so hopefully that kind of makes sense. And so here's the ideal scenario, what you want. Remember, if the strike price is not met by the actual price, let's say here's your expiration. I'm going to put a dotted line here. Sorry, that was a horrible dotted line. But let's say this is the expiration of the options. Expiration. And you can actually buy buy these options, sell these options at any expiration, like further out in the future. But remember, the further out you buy, the more risky it'll be, because this price can go anywhere. And so what Joe did was he did a expiration date of like 2 days out. So the ideal scenario is you want this stock to just stay in this range. You don't want it to go up above this or below this, because if it stays in this range and it doesn't reach the strike price, for these call options will both expire worthless, and you get to keep this profit. And if it stays above these two prices, these two contracts expire worthless, and you still get to keep this profit. So if you're betting on a stock staying within a range, you can do this trade called an iron condor and make profit here and here, and while it also minimizes your risk. Now, I don't know what exactly would happen if your strike price landed right in the middle of one of these two ranges. I really don't know exactly how that'll work. I haven't really thought about it, but we can talk about that later, because this is kind of an advanced thing that a lot of you might not even do yet. I might not try this until once I get more comfortable with options, but it is a cool way to make some profit with very low risk. All right, so that about wraps up this little explanation. Let's get right back to Joe's scenario, and we'll see what he did.
What's up, man?
Hey, how's it going?
Good.
All right, so everyone, we're on the phone with Joe. Video chat was not working, so we're talking to him on speakerphone now. So what's up, Joe?
Yeah, so what's up? So we didn't, you missed me actually putting in the order, but I kind of got it up on the notepad there, kind of what I did. So this is
Oh, okay.
kind of different, yeah, so it's kind of a different trade than, I'm kind of getting on the other side of the trade then. And instead of buying an option and holding it through the earnings, we're taking advantage of the volatility, and we're actually selling an option. Selling it, to take advantage of the volatility, because then we sell it, earnings comes out, and tomorrow, as long as it stays between the expected move, the volatility is going to get crushed, and the value of the options we sold are going to diminish incredibly. So,
okay.
Can you see my screen right now?
Yeah. Mm-hmm.
Okay. So, pretty soon you're going to see, this is Tesla on 15-minute chart here.
Okay.
And in a matter of seconds, you're going to see this thing go crazy. And
Oh,
you'll
okay.
see the red line represent, so I sold a 310 call, clear up here.
Okay.
I bought a 312.50 call for protection, okay?
Okay.
So that right here is this. So I sold that spread, and I took in a 10-cent credit, okay? And then my broker charges me $1.50 a contract. So to buy one call and sell another call cost me 3 cents, basically.
Okay.
So that was a 7-cent credit, net credit, okay? And that was, if you look here, so if you look right here, this is the market maker expected move. So this is like the implied volatility of Tesla with only 2 days left on this contract. So, this contract expires in 2 days.
Okay.
And there's a 17-point move baked in, which is, a huge move for only 2 days left.
Yeah.
So what I've done here, figure, just one standard deviation would be 18 points, basically. 1.5 would be 27 points. 2 would be 36 points. So on the call side, because Tesla's been so crazy, volatile and really going up, I kind of took a little bit of a bias toward, I sold two standard deviations on the call side to kind of give it a little more room on the upside. And then I sold a 1.5 standard deviation put. So I sold the 247.5, bought the 250. I took in a 20-cent credit for that because it was only a 1.5 standard deviation, so it was a little closer to the expected move. So I took in a bigger credit, and it still cost me the 3 cents. So
Okay.
I don't know. We'll see here. I mean, we'll see. Pretty,
So what would be like?
yeah.
What would be an ideal scenario for you? So for you to be able to make money on your trades that you just did?
Yeah. So an ideal scenario is Tesla's going to bounce around in this range between these two red lines.
Okay.
It's going to get crazy, up or down, and it's going to open up tomorrow, and it's going to be somewhere in between, basically. And so, like, for example, because once the earnings are out, the volatility will just suck out, right? And then, let's say it opens up at, 290 or 300. Well, these puts that I sold clear down at 247, they're going to be absolutely worthless.
Okay.
I'll probably let those expire. And then my call, like I sold a 310 call, so if it actually goes up, my 310 call, though, is still going to go down in value that I sold because that volatility is going to just evaporate. So even though Tesla tomorrow, closes at 273, even if it opens up at 295, let's say, that 310 call is going to probably lose value. And I mean, these calls have 2 days left, so there's a little bit of time left on them. So they're not going to completely go to zero, immediately. But basically, if Tesla just trades within this range into Friday, then the calls and the puts that I sold are going to be totally worthless, and I'm going to keep my credit.
Mouse here. Okay.
Yeah, right here. Okay, so the 310 call, for example, I sold for 34 cents. All right, and I bought the 312 call, 312 half for 24 cents. So that's a 10-cent spread.
Okay.
And that's what I took in. And then on the put side, I sold the 247 half for $1, and I bought the 245 for 80 cents. So that's a 20-cent difference.
Okay.
So yeah, so that, I mean, the idea here is that you're getting on the better side of volatility, right? Like you're taking advantage of, just a high volatile trade where, people are buying options, you're selling out of the money options to people. I mean, basically, like the stats show that most out of the money options that are purchased end up going to zero before they're sold. So you're kind of taking advantage of that. You're selling. So basically, what you're doing is you're selling an out of the money call and selling an out of the money put, and just letting the volatility crush and keeping your credit. So like basically, the for this trade, I'm essentially risking $500, $250 on each side of the trade.
Okay.
And then after my commissions, I'm hoping to make $24, which is a 4.8% return.
Okay.
Which doesn't sound like a lot. I mean, it's not, buying something and watching it double or triple, but at the same time, it's like a high probability trade, and it's only going to take me a couple of days or a day maybe to realize that entire gain.
Right. I was going to say 4% in 2 days is still fantastic.
Yeah. Well, yeah, so what will happen is, if Tesla stays right here, I mean, that's perfect. I mean, you couldn't ask for more. If Tesla just stays right around 275 until Friday, I won't touch any of these options, and I'll just let them expire worthless, and I'll keep all my credits. If Tesla were to go hard in one direction, like if it were to go up hard, I wouldn't touch my puts because those are going to be worthless. I'm not going to worry about those. But if one of the sides, so if it were to go up heavy hard or whatever, my call might be, if it would approach 310, for example, my call that I sold is going to increase in value, and that's not good.
Okay.
So at that point, what I would probably do is I'd put in an order to buy it back at a nickel, and so if at any point from now until the close on Friday, if the market would ever allow me to buy it back for a nickel, then I would do that. And my broker is not going to charge me any commission by doing that because they're happy to get the risk off the table. So I can buy it back for a nickel without any trade, without any commission. 247 half put that I sold, and it goes through it, for example. Like if it goes through it, that's bad.
Okay.
Like, so max loss, it's 500 minus my credit. So this trade max loss is $476 basically. And what will happen is, if it were to go, let's say, down to 247 half, once it went below that, then I would be in losses, and then my losses would be capped at if it went below 245, I would be at max loss. I'd be at $2.50 loss, and it couldn't get any greater because at that point my put that I bought is going to protect me. Same thing on the upside. Like if it goes up to 310, my 310 call, if it goes through 310, and up to 312, that's my range of loss on the top side.
Okay. So ideally you want it to kind of stay towards the middle.
Yeah, no, I mean, absolutely. I mean, if it stays like it is now and just kind of, this is very muted. Like we're still only a couple minutes into it, things still get a little crazy, but this is an awesome result right now.
Cool. All right, so just got off the call with Joe. He taught us a lot of stuff. Some of it might be over our heads, but we're still learning, so it's really cool that he showed us that. So thanks again, Joe. That was really awesome of you to do that. Hope we can do some more like that in the future. So let's go back and see how we did today. We actually were up a lot of money earlier in the day. We were up like over $2,000, and we came back down quite a bit, but we're still had a great day. And so let's see what we did here. So we just $1.28 shy of a grand. But that's, still a great day. We were up over $2,000 earlier, and then the Tesla kind of fizzled down a little bit. It was like, I think it was at 650 earlier, so it kind of lost some value. But I read an article that I'm gonna post. I'll post it on the screen, showing you the different things that it said to look out for with earnings, and a lot of it was talking about the Model 3 and their delivery guidance. And the thing that really kind of convinced me to hold on to it was about the Model 3, as well as Elon's relationship to Donald Trump. And I talked about this way back on day 3, what I thought was going to happen, and in the article they mentioned the same thing. And so my gut instinct told me that I might be okay if I hold on to it, and it looks like Tesla stock is doing okay after hours. And let me show you, I'm not quite sure if there's like graphs to show after hours prices, but what you could do is you could act as if you're going to buy the stock, and it'll give you the real-time price, even if the market closed already. So like I can just hit Tesla like that, and then right there you can see, so this was the closing price, 273. That's literally what the price of Tesla just closed at. Actually, hold on, sorry. Okay, so you can see here, it finished at 273. So you can see here it finished at 273. But if you look at the bid and ask, you can see that it's going up. So that's how you can check on the aftermarket, the after hours prices. You can just act as if you're doing an order, and just type in the ticker symbol and it'll tell you the real-time prices. So this is actually great news. I was really worried it was going to go down based on what I was reading earlier, but it looks like it's going up. So this is really good. So tomorrow should be a good day for Tesla, and it'll be a good day for us since we have an option here. So yeah, I'm really glad I'm really glad I read that article, to be honest, because I really was considering taking my profits and selling. So I'm really glad I didn't. And that's an example where you just got to keep reading, keep doing research, because once the market closes, you can't really, there's not much you can do. But you can do after hour trades. I haven't done it enough to really be confident and knowledgeable about, you know, how that works. So I just prefer to get all my trading done before the day closes. So yeah, so it looks like we've had a good day today. Our best gainer was AMD, the option for that, and Square has been doing really well. There's some exciting news about Square that I can talk about in the future, but they're doing some really cool things in the mobile payment space. And then Facebook had a great day. So let's see where Facebook was. Pretty sure Facebook will be on the first page. Yeah, so Facebook went up $2.40, $1.79, or not $1.79, 1.79%. So we see how we did. We did end up finishing right above 50 grand. So really excited about that. Really awesome milestone to hit. We did hit it, like I hit it last year, went up to 53, all the way up to 53 grand. And then like the month and a half or the month and a week or so leading up to the election, it dropped all the way down to 35 grand. So it was like, lost 18 grand real fast. And it was like, it was sucked. It was really bad. So it's really cool to finally get back to it. So thanks again for watching. Really excited that we hit the 50 grand mark. Also tomorrow, which is the 23rd of February, is our 1 month anniversary of starting the channel. So I'm really excited about that. We already surpassed 50 subscribers. We're like 56, 57 right now. So I'm really thankful for that. Thank you guys so much for subscribing. It's been great. It's been so much fun. I'm actually going on a road trip next week. So the vlog will take a very different turn because I won't be in my house like I am every day. I'm gonna be vlogging from the road. We're gonna be stopping at Mount Rushmore on the way. We're going to Montana. So it's gonna be really cool. I'm gonna do some vlogs there. Gonna still bring, try to bring the iPad with me so that I can still show you the stocks and how we're doing, because I do wanna check in every day. So yeah, stay tuned for that. Please hit that like button if you are liking these videos, and it helps a lot. And also subscribe if you haven't already. And again, as I always say, share with your friends. If you have friends who are thinking about investing and just want to learn some basic information, just show them the channel and see what they think. Really appreciate that. So again, thank you guys so much for watching. You guys have a great day, and we will see you tomorrow.